Gold bars, global tensions, and a tariff shock. What just happened? Imagine you're watching a perfectly synchronized dance. Couriers rushing gold bullion across borders, refineries humming in Switzerland, and traders in New York and London locking in the best prices in seconds. Now picture someone cutting the music mid-step. That's exactly what happened on Friday. The global gold market, a finely tuned network of banks, refineries, and logistics firms, shuddered when a sudden U.S. ruling hinted at tariffs on imported gold bars. Prices on New York's futures exchange exploded to record highs, only to plummet minutes later when the White House suggested the ruling might not actually apply. Question for you, viewer. If you were a trader and saw prices surge like that, would you jump in or stand back and watch the chaos? The chain reaction. The confusion began when U.S. Customs and Border Protection privately told a Swiss refiner that gold bars could be subject to tariffs. By the time this news became public, panic spread instantly through trading floors. Veterans of the market, like Robert Gottlieb, a former J.P. Morgan precious metals director, argued this was likely a mistake. Gold, after all, is treated more like a financial asset than a raw commodity. But the damage was already done. In trading hubs from Mumbai to Dubai to Hong Kong, buyers and sellers froze. Swiss and Asian refineries stopped U.S.-bound shipments, fearing the costs. A fragile system under threat. Here's the thing. There's more than $1.1 trillion worth of gold bars sitting in vaults in New York and London. Much of it is managed by giants like J.P. Morgan and HSBC. When New York prices rise above London's, gold usually flows east to west. Large bars in London get melted in Switzerland, recast into smaller 1-kilogram bars, and shipped to New York's COMEX. But with Switzerland facing a 39% tariff, COMEX prices would need to hit $4,700 an ounce for that to make sense. Viewer check-in. Can you imagine the headlines if gold really jumped that high? What would it do to jewelry prices or your investments? The market gasp. On Friday, the spread between New York and London prices hit a record, more than $100 apart. But even that gap couldn't cover the tariff costs. Some suggested the U.S. could pivot to imports from Canada or Mexico, but President Trump has floated tariffs on them too. For independent refineries, which survive on razor-thin margins, being shut out of the U.S. market would be devastating. Ross Norman, a 4-decade industry veteran, summed it up. When things blow out, you get lots of injuries. The uncertain road ahead. By the end of the day, the White House hinted an executive order would clarify the misinformation around gold tariffs. Traders, investors, and shippers are holding their breath, but this episode was a sharp reminder of just how quickly trade policy can shake a trillion-dollar market. Darwei Kung, head of commodities at DWS Group, put it simply. Every day, new rules emerge that can reshape entire industries overnight. So, if tomorrow brings another surprise ruling, do you think the market will be ready?